Welcome, everybody, and thank you for being on our podcast once again. Today, we have Mark Hilton from Alpine Gold, and we're very happy to have him on our podcast. He's going to discuss with us how the precious metal market, more specifically gold and silver, has evolved lately from a mostly boring investment to a very dynamic one. And he's going to give us some very insightful information. So let's start, Mark. Thank you very much for being a guest on this podcast.
You're welcome. No, happy to be here, Richard.
And could you introduce yourself in a few words for our audience?
Sure. Yeah, my name's Mark Hilton. I'm President and CEO of Alpine Gold Exchange. I've been in this role for about coming up on 5 years, um, and just definitely a dynamic, exciting place to be. And we're involved in much more than just vaulting, as you might, or just general acquisition of gold. My background is in Um, really was trained as an engineer many years ago. Um, I've been involved in marketing and business management, mostly in high technology industries
Hmm.
such as networking and media technology and aerospace. I've done a number of different things over the years, but I'm focused in the financial service space for the last 5+ years.
That's pretty interesting. How do you go from being an engineer to dealing into gold?
Well, I got an MBA and got into more of the business side of things, which gives you a lot more flexibility to move into different areas. It's just one business problem is similar to another business problem. It's just how do you create awareness of, how do you first find something that people need and identify a way to deliver that to the market. So I'm just passionate about this space, and so decided to take an opportunity um, to really push kind of a new way of looking at precious metals and money in general.
All right. Thank you, Mark. Um, Give us some insights into your company.
Yeah. So our focus and kind of our mission is to provide choice in currency. And right now, most of us don't even think about that. We have the US dollar and we can think, well, there's foreign currencies and so forth. But this concept of sound money, that definition of sound money is something that is not, it is money, it's legal tender, it's authorized for being used in the exchange of goods and services in a particular geography or a particular, country. But we just think of the fiat system that we have, which the term fiat really just means by dictate. So it's not really the money that we have today is printable. You can increase and decrease the amount based on policy, um, but it's not inherently um, uh, scarce. And so if you really look at what makes sound money, it's all the things that fiat give us. It's the ability to have interchangeability, to have something that's durable, that is a medium of exchange, but it needs to be scarce and it has to be a store of value. Gold has proven to be a store of value over the last 5,000 years, has been used in pretty much every monetary system since man started thinking about money. Um, and so we've always been based on gold. We had a gold standard up until 1971 in this country, and the laws have enabled us now to actually create, for those that desire, create kind of a gold standard that people can work off of. And so we're focused on providing that those solutions for people that want to do that. Um, and so in a nutshell, you know, that's our goal and our mission. We do that by offering a number of services. It starts with a durable account that you can have, you know, you acquire gold, silver, or other instruments that we'll talk about that are considered money in the United States. You can vault those. You can do a number of things with them. You can borrow against those assets. Um, you can get a return, just like if you put money into a bank, you expect to get some sort of interest rate. That's a
Mm-hmm.
piece of the lending business that banks will do. So we do something similar, but also something quite different than, if you compare us to a bank, which a lot of people do. We're not a chartered bank, to be clear. We leverage the trust law. So every account is a trust, which gives some inherent privacy that a lot of people like. But what does a bank do? It's a place to put your money. You can leave it there for a while. Truthfully, when you deposit into a bank today, it becomes an asset of the bank, and the depositor becomes a creditor, and they're not necessarily the first in line to get paid out. And then the majority of that is released or used to gain a return for that financial institution without necessarily the approval of the person who put it in there in the first place, the depositor.
Mm-hmm.
So there's the concept of fractional reserves, which means the bank doesn't have to leave the money you gave it in their vault. They can do things with it to get a return. In our case, our policy is we have 100% reserves, which means you put $100 in, we buy $100 worth of gold, and it stays in the vault unless you tell us otherwise to do something with that. So you retain complete 100% ownership. You're the trustee on that account. And if you decide, I want to get a return on this, then we come to a contractual agreement where you lease it back to us, and we use it out with a number of lessees who basically want to take out debt in precious metals because their business correlates to the price of gold better than it does to the price of the US dollar. So it's a natural hedge for them to take out the debt in gold. So we do that, and then we get a return based on that.
Okay.
And so individuals can increase the amount of gold, silver that they have in their accounts. So that's one area. We also allow people to borrow against it, et cetera. So I'll pause there for a moment to let your viewers digest that, and then we can maybe have some follow-on questions about some of the details.
Of course. Thank you, Mark. Who usually is your target audience? Who comes to you?
Yeah, these are mostly folks that have spent a good portion of their life developing some financial reserves. So they're not necessarily living hand to mouth, or just paycheck to paycheck. So they have something that they want to store for future
Mm-hmm.
generations or for their retirement or something. So that's kind of where it starts. A lot of times there are people that are maybe skeptical of the current monetary system that we have, or concerned of some of the behavior of printing money for issues that come up. We saw the money supply go up a lot during the pandemic, essentially printing money, right,
Yeah.
to help people through that process, but we end up paying for it later, right? So it's a short-term solution, but we pay for it in the hidden tax of inflation that
Mm-hmm.
occurs. And so it's people that want to, protect their purchasing power. They're usually liberty-loving people that are focused on, personal liberties. They're not necessarily all, right-leaning on the political spectrum. We have both sides. We do have a product that's quite unique called the Gold Back, that I showed you earlier, but I'll just show your viewers. Here's an example of a gold back, which is it's a gold note. And we have a bunch of these, but it's a complete currency system. And we have about over 2,000 merchants now that will accept those for payment. Um, you know, we give them the choice, they'll take these, right, which one
Yeah.
these are, and they'll take these as well. And they have a conversion factor that changes every day. Um, and a lot of times we find younger folks are interested in the gold back. It's for various reasons. They have the same concerns. They want to make sure that their money is protected, but they seem to be more open to technology and new things. And sorry about my camera; it's going in and out of focus here.
Yeah, it's back.
But that is so. I would say we kind of have two main audiences. You have the younger crowd, and they're more interested in the gold back, and we do have some crypto partnerships where we will back a stable coin that's backed by gold, and so some of our clientele will be interested in that solution. Usually the younger, more technically savvy folks.
Hmm.
And then you have maybe the little older crowd, more conservative, just want to hang on to what they've earned their life,
Yeah.
through their life's work.
So it seems that you have a very dynamic product that differ quite a bit from what people can think of what is gold. Because when we think about gold, it's always something pretty, okay, I invest in gold. I'm not sure exactly why or when I should invest in, or and gold is not very attractive in terms of investments. It's not like we invest in the stock and they come out with new product, new service, everybody is happy, and the stock rally for 20%. The gold it used to be seen as as a pretty static investment,
Mhm.
but you have turned that into something very dynamic.
Yeah, no, you make a great point. It's it is kind of the boring metal, right?
Yeah,
Um, and that's okay. It has its place in an investment strategy. You're probably not going to quadruple your money in 6 months in gold. Um, Having said that, over the last couple of years, people who've held gold have done very well. It's gone probably, you know, basically doubled in the last 2 years. And so
hmm,
that's not normal. Um, on average, since we went off the gold standard, gold has been 8 to 9% per year increase. And I kind of look at that as another way to measure inflation, because the purchasing power that you have today with an ounce of gold is about the same as what you had 50 years ago. Um, but you just haven't lost value through inflation.
yeah.
But yeah, it's becoming quite interesting. There's a lot of legal things happening. A lot of states are looking at this now. We're heavily involved in lobbying and working with state legislators to reduce some of the barriers that exist to using gold beyond just putting it into a vault. Things like capital gains taxes, sales tax, the ability to potentially even pay your taxes directly to government entities in gold and silver. So all those things are happening across the nation. A lot of people probably don't know about it, but um, state governments are obviously wanting to exert their own sovereignty and their own, um, you know, power in the government structure, and they're putting into place some of these things. We're also working with the federal government on some new legislation. So it is a very dynamic space. Um, and when you start to think of gold as money, then it becomes as dynamic as the paper stuff that we all use. Um, Now, I will say that from the investing side, there's going to be fewer vehicles. I mean, you've got so many choices in the traditional financial world with, securities and dividends and, options and so forth. And we do leverage some of those things. But I would say most people think of gold as a hedge against inflation. They usually put it at a single digit percentage in their portfolio strategy. That's what I was taught in business school, is you always
Hmm.
want some sort of commodity that's going to hold its value, but probably not going to go up much. Um, and but when you start to think of that as, you know, kind of the modern portfolio theory of having a risk-free asset that is mixed with risky assets, and you can weight based on the risk that you want. You're gonna have a weighted average between those different things.
Yeah.
What we tell people is think of gold more as your risk-free asset instead of a treasury bill that you get from the government, because that's the normal thing that you would call a risk-free asset. In reality, those things are losing value as well because it's denominated in U.S. dollars. Even if they're paying 4 or 5%, we've seen inflation higher than that in recent years. So you're actually losing value in your quote risk-free asset,
Yeah.
whereas gold has been doing very well. So that's a way to think about it. And then when you factor in that you can actually lease it and get a return, all of a sudden people start thinking about gold in a very different way. Now it's an actual investment where I can get a return and grow my wealth, and it's a real return, right? It's not a nominal
Hmm.
return, because if you're measuring return in the stock market nominally, that's how much you mentioned 20% earlier in a conversation. Okay, I got 20%, but what was inflation during that period of time?
Yeah.
Let's say it was 10%. So my real return is 10%, 20 minus 10. In the case of gold, you could make the argument you start with no, you don't have to adjust for inflation. So if I can get 3 or 4% return on leasing my gold, that's a real return. Um, and the risk is very low. So when you adjust it for risk, uh, it becomes a very attractive investment. And we've had a lot of people that have coming to us that used to be in real estate. And they're like, this is it essentially is real estate. You think about it, little pieces of coins. They came out of the earth, right? So it's like a type of real estate, but there's no local market for it, and so you're not exposed to local risk. It's a global market, and there's very few headaches. You don't have to think
Hmm.
about renters. You don't have to think about upkeep. It's just a beautiful,
Finances.
low headache investment, and that's what's drawing a lot of people to this. And then you layer on that the usability as an actual monetary instrument. It becomes very attractive to those that understand it.
All right. You mentioned purchasing power and inflation quite a bit in the last few minutes. Could you expand on that for our audience to explain exactly, how inflation impact purchasing power?
Yeah, so purchasing power is really just what can I buy with a given unit of monetary unit. And inflation, the definition of inflation just really means the increase in the money supply. So it's not necessarily a bad thing if your a population is growing, you're going to need some
Hmm.
natural increase in money supply. But if it's excessive, then and the demand for those units to be used as money is reduced per unit that you have out there, then it's worth less, right? You
Yeah.
don't, and we've all felt this, right? I mean, you think about, um, I mean, even in real estate, there's a lot of analysis around the utility and the value of a home today versus 50 years ago.
Yeah.
Really not that different. It's a place to live, and you know, but if you sold a home from the 1970s today, you're going to get a lot more US dollars for what it costs to buy. And you might feel like, wow, look at all this money I made. But when you adjust it for inflation, you'll probably come out to, you know what, it's about the same, and
Yeah.
maybe a little bit less actually because it's depreciated. You know, there's maintenance costs and so forth. So you know, inflation is that we call it a hidden tax because you know the government has a choice. To bring in revenue, they can either tax the population directly or they can increase the money supply, and that's another way of taxing um, the, the citizenry, but it's not as obvious, and so it's really an insidious thing, and it's a destabilizing factor for economies. Obviously, we've seen extreme cases in Germany and Argentina with hyperinflation. That's very obvious. I've lived in places like that, and I've experienced it. Talked to the local population. They know what inflation is, and they know the ravages and the evils that are brought along by inflation. Our founding fathers knew about it because they had hyperinflation in the colonies. They had
Hmm.
fiat to pay for their colonial wars, and it that was the reason that they designed things the way they did in the Constitution. And that's really all we're doing is leveraging the Constitution view of money, trying to provide a stable platform for people to live their economic lives. And so hopefully that addresses your question.
Yeah, yeah, it does. It does. Thank you very much. Um, so you made it dynamic. You launched this company a few years ago, and you turned something that is usually seen as being pretty static to being really dynamic. You even work with stablecoin, which says a lot here. What are your views for the future for these markets?
Well, it's definitely been growing, a lot more interest. Anytime there's sort of turmoil and chaos in the economy, we see um, a big increase
Influx?
in interest, a big influx of folks. You know, during the pandemic, big growth spurt. I think under the current administration, it's mixed because there's a lot of there's some hope in areas and there's some concern in other areas. So it kind of just depends on your perspective. But there's a lot of issues with tariffs and what's going to happen um, here and there. So anytime there's uncertainty, they tend to migrate back to stable areas. Um, if you look in history long enough, anytime every fiat currency basically that's ever been invented has collapsed over time. I mean, that's the reality. And when it's big enough collapse and you sort of reform your economy, again, almost 100% of the time it's based on precious metals. Is how they start. And then they eventually move back to a fiat system. So we've seen this cycle over the last several thousand years. What will happen in this scenario, in our current economy, I don't know. I don't know how quickly, but I think it's pretty clear. The dollar is definitely under attack. There's a lot of international dollar de-dollarization activities going
Hmm.
on, making it more difficult, internationally. So all those things would lead to challenges with the dollar or fiat in general, and that all will speak well to this market. So our goal is to really get this thing established, improve education, get the legal structure in a state where people can pivot over to this without too much disruption, and I think it could actually help stabilize our economy as it grows. It's right now it's a tiny fraction of the entire economy. I think I mentioned earlier we have easy bridges between this and the traditional financial world, obviously in terms of deposits. People can liquidate and sell this for we offer a very unique feature, which is a zero buy sell spread. Um, so if you've deposited, put gold or gold backs into an account, we'll actually buy those back to you at the same rate that we sell to other people on that day, up to a certain amount per month.
Okay.
We can't do unlimited, obviously, um, and we have some vaulting fees that help. We make a little bit money on the leasing, but we don't make anything on the transaction. And we do up to $10,000 a month per account or per account holder. So that allows you to really think of this more like money. I'm just holding it in a place that's very stable. When I need it as paper money, then I convert it, and I don't pay a penalty when I convert back to fiat, which is I think a lot of concern that people have had. It's like when you buy a house, if I'm going to sell that house, I'm going to have to pay a realtor, and there's going to be 6% penalties anytime I want to get in and out of the real estate market. Um, with gold, also, there's typically a spread of, can
Yeah.
a bit depending on what you're buying. So we've offered that as well to reduce the friction that people experience going from one world, one currency to another back and forth. We're trying to make that as easy as possible for people.
All right. Well, Mark, we're almost at the end of this podcast. Any last word that you would want to tell our audience?
Well, I would say, educate yourself on these topics. Um, look at gold, silver, or gold backs as part of your strategy. It's not the complete solution, but it is something that should play into that. Um, a lot of people will buy exchange traded funds, ETFs of gold. They don't really own it, and a lot of times those things end up being under uh, underbacked. They're really not fully um, supported by the value that you're paying. So, in our solution, you've got security that it's being held or it's being leased. We have third-party audits by individuals, independent organizations to verify that it's all there. This is always a concern of people as well. It's like, who really has that gold? Should I keep it in my house? It's 100% insured by Lloyd's of London. Um, so I would, yeah, take a look. You can go to our website at alpinegold.com, which explains a lot of these things. And we're always here to answer questions.
All right, Mark, thank you very much
Okay.
for coming on this podcast, being a guest, and giving our audience a lot of insight information about how we can look at gold as being a lot more dynamic than we think about it. So, thank you very much, Mark. You have a good day.